Excel accounting practice problem, bank reconciliation, month 2, part 3. Get ready because we're about to excel. Here we are in our Excel worksheet. In prior presentations, we put together the worksheet from a blank sheet, now continuing to enter transactions into it. If you have access to it, there's 2 tabs on down below, an example tab and a practice tab. The practice tab starting out where we left off last time, the example tab in essence being an answer key. We're going to stay here on the practice tab and go all the way to the right where we've been entering the information for the bank reconciliation. We've done 2 months of bank reconciliation and still working on the second month of the process. So we're going all the way over. Here's the first bank reconciliation, and then we did the second where we basically matched out the information on the general ledger to what is on the bank statement. And that helped us to determine the items on our books which are not on the bank statement, those being the outstanding checks and deposits that we're going to use to create the bank reconciliation. In doing so, we basically kind of reconstructed the bank statement because the common notion would be that if it is on the bank statement, then it should be on our books unless the bank made an error. But generally, we're going to have to add it to our books. So we basically went through and tick and tied everything off in a similar fashion as you might see in accounting software, like a QuickBooks type of software. And we looked at the outstanding items from the last bank reconciliation, as well as the activity for the current period, those being the uncleared items. We started with the same cleared beginning balance that was the same balance in the prior bank statement, which matches our cleared balance in our books as well. Then we looked at the items that were cleared deposits and checked them off, whether they were open in the prior period or whether these are actually the cleared deposits or in the current period. Those were the additions, the 51,981. And then we looked at the decreases, and those are going to be the checks that were either outstanding last time that cleared this time or that cleared in the current month. And we're a little bit different here because we had 2 items that were decreases on the bank statement, that being the 500 and the 20 that were not on our books, and therefore we have a difference of the 520. If you're using accounting software, then what you would have to do before you actually hit the little reconcile button is to add this into the system, so our ending book balance would then match what it should be, and so then we would have this reconciliation, and we would just be looking at the differences on the timing differences, typically being the outstanding checks and deposits. In a book type of problem, you'll often be given the information that are the differences, and then we have 2 sides, the book balance, this being the ending book balance, and those changes that we need to make on our side, which typically will include items on the bank statement that we have not included that we're going to make a journal entry for, and then the bank ending balance this time. And looking at those outstanding items, these outstanding items in a book problem often being given as simply outstanding items, but in practice, of course, we would need to tick and tie what we put in our system compared to the bank to find out what those outstanding items are. These are the items that we did not check off over here when we went through this checkoff type of process, and these are the reconciling or timing difference items. Remember that these items are items that we expect to clear in following months, most likely in March. We can check that at the point in time we do the bank reconciliation, but we also it's not just to get those items to reconcile or to make sure that these have cleared that we do the bank rec. We do the bank rec to give a verification that the activity in the bank statement is correct, and if it is, not just the ending balance, but the activity, that means that the other side of the accounts are correct as well. The other sides go into other areas of the accounting system given the double entry accounting system process, including sales cycle, purchasing cycle, and so on. So now what we're going to do then, we're balanced out down here. What we're going to do is basically enter transactions for these 2 items, which will change the book balance to be what it should be, the adjusted book balance. It'll change it to the adjusted book balance, and then we'll be left with just this side as, in essence, what a bank reconciliation is, which would be created from the reconciling process that people are often used to in QuickBooks type of software, which you check things off over here. So let's go all the way to the left so we can enter this into the system. We're going to go all the way to the left to do our journal entries. And so then I'm going to hide some cells, going to do some cleanup work. We're going to take cells, the skinny over here. We're going to take the skinny and go all the way to the left and hide, right click and hide that stuff. And then do I have room down here? I don't think I have enough room. We need to make another set of room here. So I'm going to put my cursor from U to X, Control C, copy, and paste that in the skinny Y. Insert the copied cells, and then I'm going to add another skinny right here before the Y, copying this skinny, copy the skinny, hold on a second, copy the skinny, and put that before the Y, and just right click and insert the copied cells. Then I'll hide the Y to U. We don't need that stuff anymore. YU, we're going to hide that. And then I'm going to basically do my format painting, home tab, format paint this whole thing to make it nice, clean, blue slate that we're going to create our masterpiece upon. There we go. And so we've already copied over our ending balances to the beginning balances. So we got a nice clean worksheet to work with. So first what do we have? I'll tell you what we have. What do we got? We've got the withdrawals of 500. This time we're going to assume the withdrawals are draws. So they took money out and they just took cash out. Now, if you use the cash for the business, then you got to check receipts or keep receipts and whatnot, because cash doesn't have a good audit trail to it. And we want the audit trail when we're looking at deductions for taxes, especially, because we would like to, in the event of an audit, be able to verify it. If it's just money that's coming out for personal use, maybe we don't want an audit trail with that. We'll just take the cash, and then we would assume that would be a draw. So we're going to assume it to be a draw this time, the withdrawal. So this is going to be as of, I'm just going to say at the end of the month, 2/28. And we know the checking account's going to go down, so that's going to be on the bottom. Checking account's going to be a decrease. And then the draw, it's important that the draw is not going to be an income statement account, because it's not an expense. It's not going to be something affecting the income statement. It should be up here in the equity section. Some people might just put it into equity. You could do that, or you can create another account, an equity type account called draws. So I'm going to select these items here. I'm going to right click and insert, and put it right under the equity, shifting the cells down. And we'll just call this draws or withdraws, whichever you prefer. Draws. Makes me think of like a duel or something where they're drawing like pistols. And then we're going to go down here, and then we're going to pick up the draws. And then we're going to say this was for $500, because that's what the amount was on the bank statement, I believe. Let's double check it. Yes, indeed it was. My memory was like a trap made of steel, a steel trap. So we're going to go down here and we're going to go to the draws. We're in AH22 equals, scrolling over to the 500, increasing it in the debit direction. It's kind of like a contra equity account because it has a debit balance, decrease in essence the equity. And then the other side is going to be going to the checking account, of course. Check out the checking. There it is. Let's post it to the GL as well. I'm going to have to add the draws to the GL. That's going to be after the equity. So I'm going to go to the right till we find the equity blue accounts. Equity blue. There's the equity blue. We call that equity blue. And then I'm going to select these from the skinny to the BX. Control C. I'm going to paste that in the skinny right here. Control, and then insert copied cells. Okay, and then I'm just gonna move this bottom one up to the top. So I'm gonna take this one, I'm gonna say Control X, and then just put it right there. And then we'll delete the stuff in it, because we don't need the stuff. And this is gonna be up top in BZ2. BZ2. I'm BZ. Everybody's BZ these days. BZ2 column, scrolling over, picking up the account of the draws, and the date I'm going to say is on 2/28. So then we are in cell CA, California 5 Freeway, scrolling to the right or the left, we're picking up then the draws of the 500. There it is. Let's add that to our check number then. The check number, which is out of control, but it's still in control, kind of. It's right there. We're going to double click on it. Got a lot of stuff going on. It's just a mess, but it's an organized mess. It's a mess that's somewhat organized. It's not a contradiction. That's like, we're down here, the 500. We're going to be out of balance by the 500 then. And then the other side, we need to post to the checking account. That's where all the action is. That's an easy one to do. E to the Z to do. This is down here on AL, AL 23 to 28. AL, and this is going to be equal to the AM 23. Because you've got to get up early in the morning when you're taking the draw out of the checking account. So we're at the 95279. That's going to match the 95279 on the trial balance as well. Okay, so then we're going to do another one, 228. The other one was simply the bank service charges that were here. So we got to do that, $20 in the bank service charges. That's just going to be an expense that we'll typically list out here as bank service charges. Other side going to the checking account up top, checking out the checking indentation, the amount being for $20, 20 on the debit, on the credit, right? $20, yes indeed. Let's do it then. So we're going to post out the bank service charges. Bank service charges on down below. We are in cell AH 28. Scrolling up. And we're going to pick up then the $20. There's the $20 having an impact this time on the net income down below. And then we've got the checking account up top, checking account, double clicking on AH plus and picking up the $20 there too. That puts us back in balance. We had a change to the net income for the current month. What was starting at the actually we had a little bit of adjustment on the, so let's just look at the year to date. The 4790 down by 20 to the 4770. The cash now at the 95,259. Let's record this to the GL. Bank service charges is way down here. It's like right in the middle of the expenses somewhere. It's after cost of goods sold. So scrolling to the right to find the bank service charges that we added last time. Bank service charges, there they are. This is at 228. We're going to say we are in CQ6. CQ6 equals left until we hit that wall. Boom. And then we'll pick up the bank service charges of $20, bringing the balance up to the $35. The $35 should match what's on the trusty trial balance. Does it? It does it. Does it? The $35, the bank service charges right there. It does indeed. And then we're looking at the 20 out of balance by 20. We're going to pick that up in the checking account. So we'll scroll on over to the checking account to check it out. Down here on 228, perfect amount of room scheduled for the checking account to pick this last item up. Equals, scrolling up, we're picking up the $20. Now we're at the 95295, 9525295. That's the amount that should be on the trial balance as well. There we go. And everything's back in balance on the GL. So let's go and see what the impact is on the bank statement if we were to do that. Scrolling all the way to the right and say, well, what does that do? What does that do to the bank statement? That means that this GL account that we wrote here is, I got to add those last two components to it because this is basically a copy of the GL. This would obviously pull over automatically if you had a database program like a QuickBooks. These last two items up here in, which would be 228. We had the $15 or $20, I think it was, and then 228, we had the $500. Those two items now have been posted in our books. There they are, and they have cleared. So they have cleared because they're on the bank statement, so we should add them here. So I'm going to add them here by saying this is going to equal the $20. And they should be a negative down here, by the way. Negative and negative. So now that brings the balance to that 95,259. That should match what we just saw on the trial balance and the general ledger. So now we're just going to pull this on over to our bank reconciliation worksheet. And so now we should tie out here. So now we have a difference of 0. We got that rounding difference because we've been working without pennies. So we got the 61242. This is kind of like what the QuickBooks, if you're working in QuickBooks, the system, this would be the process of reconciling. We'd say, okay, yeah, the starting balance is the same, 61242 about. And then we had the deposits, the 51982 that cleared. We checked them off. They cleared. 51982 cleared. Yeah. And then we got the checks and other decreases are at the 11633 that cleared. Yeah, 11633. Therefore, the ending balance must be then, if I take the beginning balance plus the deposits minus the withdrawals, the cleared balance of the 101591. And we're saying, yeah, 101591. Great. So we basically just recreated the bank statement here, and that would allow us to click the little button on accounting software to say, would you please reconcile now? And when you say, please reconcile now, QuickBooks, this is not what it's going to generate this. It might put it as part of the report, but this isn't really the bank reconciliation. It's going to then say what's on our books and what's the difference, which are the unchecked off items, which again include this unchecked off item that still didn't clear from the last bank rec, so it's still not cleared, and the uncleared items that are in February. And that would look kind of like what we would see in our book problem, except now we don't have this side because these two are gone now, and our beginning balance is now correct because we added everything on the bank statement to our book, so it's now at that 95259. I don't have any other adjustments to it. So there are no adjustments, so it ends out at the 95259. And then we have the bank reconciliation, which is the 101590, the ending balance. So this is the ending balance here that we're looking at. And then we're going to adjust it by the outstanding checks. Those are the unchecked off items, outstanding deposits, the unchecked off items to get to the adjusted bank balance, or the adjusted bank balance, or the book balance. So this will match then the book balance over here because there were no adjustments to the book balance. And so this side is in essence the bank reconciliation at the end of the day, at the end of the process.